Ladies and gentlemen, good day and welcome to the Southwest Pinnacle Exploration Limited Q2 and H1 FY2026 earnings conference call. As a reminder, all the participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. I now hand over the conference to Ms. Purvangi Jain from Valorum Investors. Thank you, and over to you, ma'am.
Good evening, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Southwest Pinnacle Exploration Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the second quarter and first half of the financial year 2026. Before we begin, a quick cautionary statement. Some of the statements made in today's earnings conference call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call. We have with us Mr. Vikas Jain, Managing Director and Chairman, and Mr. Piyush Jain, Joint Managing Director. Without any delay, I request Mr. Piyush Jain to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Purvangi, and good evening to everyone, and a warm welcome to all of you for joining our first ever earnings conference call. It's a pleasure to connect with you all today and share how Southwest Pinnacle Exploration Limited has been progressing. As some of you may be new to our company, I would like to begin with a brief overview about the company and then move to our financial performance for the quarter and the first half of the year under review. So Southwest Pinnacle is one of India's leading private exploration and drilling service providers, offering end-to-end integrated solutions across a broad spectrum of services, including coal and non-coal mineral exploration, aquifer mapping, coal bed methane exploration and production, 2D and 3D seismic exploration, and passive seismic topography, underground core drilling, and coal business operations. Over the last 19 years, we have built a strong track record of operational excellence, having successfully completed more than 150 projects across India and selected international markets. We currently operate a fleet of 40 advanced drilling rigs, supported by a team of geoscientists and specialized geophysical and logging equipment. We have drilled over 30 lakh meters without a single lost time injury, and a record that reflects our strong focus on safety and disciplined execution. Our marquee clientele includes Reliance Industries, Vedanta, Oil India Limited, ONGC, CMPDI, CGWB, Hindustan Copper, Hindalco, among others. We are currently executing 19 ongoing projects across various regions in India. I would like now our CMD, Mr. Vikas Jain, to take you through the financial highlights and Oman operations and the Jharkhand, development on Jharkhand coal mines.
Thank you, Piyush, and good evening, everyone. Let me first brief you on our financial performance for the second quarter, followed first half of the financial year 2026, followed by which I'll provide you some of the key operational highlights for this period under review as well. I'm pleased to share that Q2 FY26 was our best ever quarter. The operating revenue for the second quarter was INR 62 crores, representing a 128% year-on-year increase. The EBITDA stood at INR 15 crores, an increase of 326% year-on-year, while the EBITDA margin was around 23.24%. The net profit after tax was INR 8.4 crores compared to INR 40 lakhs in Q2 FY25, which is remarkable 20-fold increase on a year-on-year basis. For the first half of financial year 2026, the operating revenue was INR 103 crores, which increased by 81% year-on-year. The EBITDA stood at INR 20 crores, an increase of 148% year-on-year, translating into EBITDA margin of 19.77%. The net profit after tax grew nearly 4.7 times year-on-year to INR 11 crores, with a PAT margin of 10.52%. The strong financial results for the quarter reflect the team's consistent execution, operational discipline, and focus on efficiency. The performance was further supported by a diversified business mix, enabling the company to optimize resources, drive profitability, and maintain resilience across market cycles. Despite a challenging monsoon season, our team ensured timely execution across all projects and maintained strong growth momentum. During the quarter, we secured new orders worth INR 85 crores, including a notable 15 crore contract from JSW Energy Limited for coal exploration. This takes our total order book to INR 412 crores, the highest ever in our company's history, providing strong visibility for the next few quarters. We have also commenced the second phase of CBM production under a revised INR 153 crores contract with Reliance Industries Limited, and revenue generation has already started during this quarter. This project is expected to be a major growth driver in the coming periods. On the international front, as mentioned, we have formed a new JV, Al Atiba Mining LLC in Oman, which has already begun exploration activity in the awarded mining block. This further strengthens our footprint in the Middle East and diversifies our revenue base. Our first JV in Oman, focused on copper and gold mining, continues to perform well and generate consistent returns. Together, these ventures position the company to participate actively in the upcoming global minerals and resources exploration cycle. We have also been awarded a coal block domestically in Jharkhand by the Ministry of Coal. The block covers about 266 hectares and has estimated geological reserves of around 84 million tons. We have already completed DGPS survey and submitted the PL-ML application, which is currently under review. Once the necessary approvals are in place, we plan to begin mine development activities, marking our entry into commercial mining as part of our long-term strategy to become a fully integrated exploration and mining company. Overall, the company's operational performance, backed by strong order book, good order inflows, and healthy financials, gives us confidence that the second half of FY26 will be even stronger. Historically, the second half is the best performing period for us due to favorable weather and peak project activities, and we expect this trend to continue. We remain focused on expanding our capabilities, maintaining execution excellence, and creating sustainable value for all our stakeholders. With this, I conclude my opening remarks. We now open the floor for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Nilabja Dey from Ashmore Research. Please go ahead.
Okay, sir, congratulations on your the first pretty good result. Also, thanks for holding the first call. So, sir, my question is that I was going through your interview given to another advisory firm, and which was quite detailed. So, one fundamental question: how you are in terms of your Oman, the overseas stuff, revenue? What is the percentage of your overseas revenue currently, and what is your plan for diversification of your total revenue basket? Because to be very honest, you have mentioned one company name who is your competitor, Alpha Geo, and we have seen, because I am in the market for quite a long time, how this company suffered from multiple, because they have huge dependency on government contracts. So can you please address these issues, how you are doing? Because that, and also finally, in the, this is my last question. In the Orion conference, you have given a revenue guidance of around 300 crores for this year. Are you sticking to that? These are my three questions. Thank you.
Okay, there are four questions which you have asked primarily. First being Oman business. So, okay, Oman we have two running joint ventures. One is the services arm, where we are providing drilling rig services to local Omani companies. Second being execution of a long-term mining contract, which is being provided to Al Atida Resources LLC, which has a copper and gold mine in Oman. We have a good, we can see a good future as far as this joint venture is concerned. Second is the mining block which we have currently got in AHML, which is Al Atida Mining LLC. This is a copper and gold project whereby we need to complete the exploration activity in 3 to 5 years, and once we are able to locate the minerals, which is high, the probability is very high because it is surrounded by existing mines. We shall be able to start the mining activity. Second part is the revenue part, which I'll ask Mr. Dinesh Agarwal, our CFO, to guide you through.
Yes.
Yes.
Revenue from Oman, Agarwal sir.
Hello. Yes.
Yes, sir. Your voice is not clear, sir.
See, actually, I'll tell you, Nirajji, one thing. As far as Oman is concerned, we don't go line by line accounting. We just focus on the profit or loss figure because one of the joint venture we hold about 35% share, and in the other joint venture which we have just started is we hold about 17.5% share.
Okay, fine. Can you move to the other questions, please?
And the third part was Alpha Geo. So Alpha Geo is primarily, as far as I know, Alpha Geo is primarily focusing on oil and gas seismic activities.
Yes.
What we are focusing on is on the entire spectrum of exploration activity, in which seismic is a small part. It only constitutes about 4% of our revenue.
Okay.
So we are quite different from Alpha Geo in that sense.
Okay, surely. And finally,
and the third part was about the revenue guidance. We have not given a revenue guidance of 300 crores.
Okay, because I don't know why. I saw the Aryan's notes. They have captured that management. Anyhow, I'm fine. That's fine. Are you giving any guidance for FY26?
Yes, we are giving, in terms of percentage, we are giving a guidance of 15 to 20% increase CAGR over the last.
Hello, Vikas sir. I'm
Yeah.
sorry to interrupt, but you are not audible.
Hello.
Am I audible now?
Sir, your voice was breaking.
Am I audible now?
Yes, sir.
Yeah. So as far as the revenue guidance is concerned, we are giving a growth of 15 to 20% year on year from the last year.
Sure. Thank you. Thanks for. I wish you all the best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address all the participants in the question queue, please restrict your questions to 2 questions per participant. Thank you. The next question comes from the line of Kaushal from Invade Research. Please go ahead.
Hi, thanks for taking my question.
Sir, I'm actually new to your company, and I just saw your company after the results were declared. So pardon me for some, basic questions here. Just wanted to understand, sir, your business model in terms of revenue recognition. How do you recognize your revenues for, these mining activities? As I understand, probably give your, equipments to the customers, and probably you service them or they will use their equipment. But apart from that, is there revenue sharing on the final outputs which are coming out of these mining? Just wanted to understand the industry. And I think my second question is around historical growth of the company. So till 2024, from 2017, your average growth in top line was around 7-8% only on a CAGR basis. What has happened in the past 2 years that we are growing at a higher pace now? Has something fundamentally changed in the industry?
So I'll ask Piyush to answer this question. Piyush? Okay. So first of all, see, most of our revenue comes from exploration as of now. In future, yes, mining, will be a major growth, rider. But as of now, exploration is the main thing what we do. Now, when it comes to exploration, we are present in all the domains, like whether it's CBM, drilling, production drilling, exploration, coal exploration, mineral exploration, seismic activities for oil and gas and coal, aquifer mapping. So we are present in all the domains of exploration, and that is how the revenues in the company. Now, in the last few years, what has happened is that because we are present in all the domains, but all the domains were not going accordingly. I mean, hand in hand. But what has happened in the last 7 or 8 years, because of the change in policies from the government, that all the exploration, the mining has opened up, and which is basically given a leverage to us, and that is the reason that now we are getting revenue from all the domains, rather than 1 or 2 domains and then the other domains keep silent. But this time around, we have all the cylinders firing, all the domains are working properly.
So can you explain some of the measures by government which is leading to this highlighted demand in your case? Just maybe a follow-up on the previous question.
Yeah, okay. See, since we are present in different verticals, so first let us take the coal and mineral exploration part. So as we all know, government has opened up commercial coal mining as well as commercial exploitation of other minerals. So they are coming out with auctions. So these companies are free to participate in these auctions. So whenever the blocks are awarded to them, they come to companies like us and give us the exploration work. So a lot of work is coming from auction of commercial coal block, which they have done more than 200 in the last 4 to 5 years. And then they also plan to do auction of other mineral blocks, which are going to be 500 in numbers approximately. Some of them has already been awarded to, and some of them will be awarded in the near future. So that takes care of the mineral, coal and non-coal. So coming to oil and gas. So oil and gas, government is awarding seismic work through National Seismic Program. Then they are awarding CBM blocks and other conventional, non-conventional oil and gas blocks through OALP. Then they are conducting open auctions for petroleum blocks. In addition to that, as far as aquifer mapping is concerned, our Honorable Prime Minister is very keen on conducting or evaluating the quality and quantity of the groundwater resources, for which the Central Groundwater Board through Ministry of Jal Shakti is conducting aquifer mapping throughout the country, whereby they are evaluating the quality and quantity of the underground water reserves we have. So different parameters of exploration or different domains of exploration, we have a different business proposition.
Understood, sir. Thanks. So just another follow-up on the mining revenues. Can you explain how mining revenues?
Kaushal, sorry to interrupt. but we won't be able to take more than 2 questions. So I would request you to join the question queue again.
Sure. Thank you.
Thank you, sir. The next question comes from the line of Ashish Soni from Family Office. Please go ahead.
So this mines and minerals program, I think it's becoming globally important. So what's our strategy to, and who are our competitors in this space? Because now everybody is talking about after this China incident, right, rare earth control, that everybody has realized that they need to. So what's our strategy in terms of one is domestic as well as international markets, and who are our competitors?
Okay. See, as far as domestic market is concerned, suddenly the mining market in terms of oil and gas, because oil and gas is also a kind of mining. And coal and non-coal has opened up because government doesn't want to rely on imports anymore due to global uncertainty. So they want to unlock the natural resources which we have, and fortunately we have so much of natural resources present. Only thing is that the previous governments were not exploring it, or the focus was not on the exploitation of natural resources within India, which this government has done it, and this has opened up the industry. And definitely, mining will not start just like that. You need to do scientific exploration to start mining. So this gives an opportunity to a company like us, and that is what we are encashing on. And we have a long way to go. Still, we are only spending 2% of our entire mining budget on exploration. And in other countries like Australia and South Africa, they are spending almost 10 to 15% of their mining budget on exploration. So we have a long way to go as far as India is concerned. And as far as international opportunities are concerned, we are present in Oman since 2013. We went there as a drilling contractor. 2017-18, we formed a first joint venture, Alara Resources LLC. We started providing drilling services. Then we bagged $125 million long-term mining contract for copper and gold mining. Now we have increased the rigs to 4 numbers. We are planning to put in more rigs over there in the near future. We have also formed a new joint venture whereby we have been awarded a huge mining block, again copper and gold. It is surrounded by nearby existing mines. So there is a huge opportunity in having our own mines in Oman as well.
And in terms of all this structural tailwind for our business, what's our revenue and growth plan, margin aspirations for next 3 to 5 years? And if you can split it by your exploration services and the mining services in terms of high-level margins targets, that will help.
See, mining services, as I said to my previous caller, we are not adding revenue line by line. Okay, we are just adding on to the profit or loss which we get from our Oman operations. So right now, as far as the growth part of the exploration services is concerned, we are hopeful that we will grow by 15 to 20% CAGR over the next 3 to 5 years. Then once the coal block operation starts in the state of Jharkhand, we can parallelly see another growth line in the mining operation business as well.
And profitability, can you answer that piece which I asked? Profitability of
profit should increase substantially, because if you increase the top line by 15 to 20%, correspondingly, I can't give you a ballpark figure right now. It's difficult to give that, but definitely the bottom line increases at a much faster pace.
Is it because of operating leverage? It's like your capacity.
Because of the operating leverage, and obviously because initial revenue is only able to take care of the fixed cost.
Okay. Thanks and all the best.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants to limit your questions to 2 questions per participant. The next question comes from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my question. So first thing I wanted to understand on this order book of 420 odd crore, what is the execution timeline and how much do we expect to do in the second half of this year?
Okay. So we have, different kinds of work orders. I mean, ranging from starting from app-to-phone mapping to CBM. Some of the projects will be completed, let's say, within the next 1 year or so. But there are 2 or 3 projects we have which will continue for, let's say, 2 years or more than that. But most of this revenue, I would say that a lot of these, the contracts will be completed by March 2027. Some of them, yes, will be extended towards FY28 as well. But that is how, we work in the industry. I mean, we keep getting orders and we keep, executing those orders. Like, there are few orders which have to be completed in the next 4 months. But let's say the Reliance order is going to continue until March 2027, but we have another 5 extensions. We may get 5 extensions on that. So yeah, it's going to be different. It's a different scenario for all the companies and all the different verticals.
Is it basically easy to can you please quantify as in what percentage can be done maybe by FY27 or no, not possible?
Well, I think as our CMD has said, it is going to be around 15 to 20% CAGR. So the revenue is going to come, accordingly. I mean, I really can't give an exact figure, but most of the contracts are for 1 year. There are contracts which are there for 6 months. There's another contract which has to be completed by December 2026, and there's one contract which has to be completed by March 2027. So there are different kinds of contracts we have.
See, we are also geared up to, in case if anything comes up, we are in the process of buying more rigs. So, we may gear up to do even more. But these figures cannot be, we can't just give a clear-cut figure. So we can only talk about assumptions that we should grow by 15 to 20% over the next 3 to 5 years.
Yeah, it is an ever-evolving situation, and we keep getting newer and new orders always.
But we are capable of executing more orders if we get it.
Got it, sir. And sir, on this 15 to 20% growth, basically PPT, and you also said second half is much better. So given that, are we trying to be a little conservative in giving this guidance, or how should we think about 1H versus 2H revenue breakup?
As a management, we always believe in what is achievable, and obviously that doesn't mean that we should stop there. If something comes up or we are able to deliver more, we will deliver more.
Got it, sir. And then any possibility to share the bid book as in what are the new bids that we have placed and what is our win rate on that front?
See, we can't disclose such things because it's a competitive market. So we have to be little, cautious about all these things.
Got it, sir. Sure, and thank you and all the best.
Thank you. The next question comes from the line of Shubham Jain from NV Alpha Fund. Please go ahead.
Hi, sir. Thank you for taking my question. I'm looking at the business for the first time. If you could just help us or help me understand, what sort of do we do in the acceleration business? Just help us understand the business a little better and what the economics of this business look like. That would be great.
It's not audible. Can you please say this question again?
Give me 1 second. Sir, is this better?
Yeah.
So I was just saying, looking at the business for the first time, if you can just help us understand what...
So you just want our business overview?
...in terms or what do we do in these exploration services? Typically, what does a contract look like? And what does the economics of a contract look like? That would be great.
Okay, I'll just explain you. We are into basically 3 main businesses. First being exploration services business, second being Oman business, and third being a coal mining business. Now, in the exploration business, there are different domains. So one part takes care of the oil and gas, whereby we have passive seismic tomography, we have CBM production, we have seismic. Seismic can do both coal and non-coal. coal and as well as oil and gas. Then we have core drilling, which we provide to coal blocks and non-coal blocks. Then we have aquifer mapping, which we provide to Central Groundwater Board. Then there are some miscellaneous activities which are pertaining to exploration activities, which are part of the exploration activity, which is geophysical logging, geology, geology writing, those kind of work.
Got it. So just a follow-up on this. So typically, oil and gas companies here, Reliance is looking to, say, find gas in some basin. They will outsource that activity to us to do the work?
Yes.
Got it. And typically, how long is the contract?
Sorry to interrupt.
Hello?
The contract, as Piyush just mentioned, the contract can be for 3 months, can be for 3 years. It all depends how fast they want it, what is the contract, is it development drilling or is it exploratory drilling or is it initial drilling? Exactly what stage of production, what stage of mining they are into or exploration activity they are into. So it is an ever evolving process. Just the initial exploration will not help the mine block owners. Once the mine block is in operation, they would require further drilling which we call development drilling, to basically expand their existing block. So it all depends what stage of business or operations our clients are into. So it can range from anywhere between 3 months to 3 years.
Understood. And which other players sort of do what we do in terms of both exploration, mining, and how much does, say, a Reliance spend on this, or rather what the addressable opportunity looks like?
Yeah.
Shubham Jain, may I request you to join the question queue again, please?
Sure.
Thank you, sir. The next question comes from the line of Darshil Jawar from Crown Capital. Please go ahead.
Hello. Good afternoon, sir. Thank you so much for taking my question. Firstly, congratulations on a great set of results, sir. Hopefully, I'm audible.
Yeah, thank you.
Yeah. Hi, sir. So, sir, just wanted to know, we've given guidance, but if I just look at it, compared to last Q2, we've, more than doubled our revenue. So, any kind of, revision in the guidance? Because it just feels like 15 to 20% can be, we can beat that right now, sir. So how do we see H2 looking as it? Because we've mentioned that, H2 is the better quarter. So could you help us give the split of how much H2 usually is than H1? Could you just, elaborate a bit on that, sir?
H2 is always better historically because there is no monsoon and the kind of activities we are into. So when there is no rains, we are able to deliver more, especially the exploration part, the core drilling part. Now, when it comes to growth, future is always uncertain. We can't, sitting here, we can't see what is going to happen in the future. So we can only give you a ballpark figure, that we are going to grow at 15 to 20%. That does not mean, that obviously as a management we would like to deliver more. But when it comes to projections, we say that accordingly,
Okay. Fair enough, sir. That helps you a lot, sir. And I just wanted to know
definitely the H2 will be better than H1.
Oh, okay. So that helps a lot, sir. So just wanted to know, in terms of our order book, so we have around 400 crores. So I don't want any win rate or anything, but what other orders are we, bidding for? Are they more private sector or are there some other foreign orders that you're bidding for except for Oman? So could you help us cover in that? Because we understand we are kind of going right now in 3 verticals of a normal business, a coal business and Oman business, but what other orders are we looking for? Because the way we are going, I think by extra will extinguish our full order book, or at least most of it. So just wanted to, get a sense of the other growth after FY27, sir.
As far as the orders are concerned, we are in touch. We already have a significant order book. Which gives us a clear vision for next coming quarters. And we are talking to other clients from different domains to enhance our order book further. But we cannot divulge right now with whom we are talking to, what is the progress we have. And as and when we get those orders, we will be sharing the information with the stock exchange.
No, I get that, sir. Just want to know, like, any targeted order book, like, we will not hold you on to it, but any kind of, like, a vision, like, right now
It all depends how successful we are in tagging those orders. Like, there are competition involved, but we expect a sizable chunk within next 3 to 4 months.
Oh, okay. That helps a lot, sir. And can I ask one more question?
What?
Can I ask another question? Hello?
Yeah, please.
Yeah, so just want to know, like, we've been able to even deliver a very good EBITDA margin in this quarter. So, going further, when the quarters will look better in terms of revenue, so what is the ideal margin that, we can make? That's what something I wanted to know, because we've, consistently now in the last few quarters doing very great margins. So just wanted to, catch up on that. So, okay, can we now be above 22% for the full year, sir?
See, the margin depends on the execution. So the idea is to work as much as possible, to cover our fixed cost. That's the basic idea. So margin differs from contract to contract, from domain to domain.
Okay. Fair enough, sir. Yeah, that's it. I'll join back with you, sir. Thank you so much.
Thank you. The next question comes from the line of Midhun James from Moat PMS. Please go ahead.
Hi. Thanks for the opportunity and congrats on a good set of numbers. Like many participants, I am also new to this company. So I had a clarification. So are you basically into oil drilling as well, other than coal and seismic and all that? And if so, do you have any rigs with you, as in captive rigs that you manage, or how is that happening? Because other companies that we track, they have rigs companies like Jindal and all that. So are you into that, or you have? Because I saw that as an opportunity area in your presentation. That's my first.
All right. When it comes to oil and gas exploration, so there are 2 or 3 parts to it. One is seismic activities, which is again a part of exploration. So we do seismic activities for oil and gas. As far as drilling is concerned, we have been drilling for CBM, that is unconventional, gas, and we are right now one of the leading players in India as far as CBM is concerned. We have 2 drilling rigs. Both are around, one is around 100 tons and the other one is around 120 tons. And they both are working for the same client. These rigs can be, these rigs can work anywhere, whether it's oil and gas, CBM, shale, geothermal, it can go anywhere. So and obviously in future, we would like to grow as well. I mean, if any opportunity comes up, then obviously we would like to, buy more number of rigs. As far as, you take the name of Jindal. So Jindal is offshore drilling. We are into offshore. We are onshore.
Okay, got it. So that was my doubt. So whether you were offshore or onshore. Okay, thanks. And second question that I have is on your new coal exploration facility that you have been awarded in Jharkhand. So that is sort of a different operation than what you traditionally do, if I'm right. So what? Sorry. Yeah, go ahead, sir.
I know, I got your question. Our family is from mining background, so it's not different for us. It's a part and parcel of what our family has been doing over the last so many decades. So that is where we come from. So it's not unfamiliar terrain for us. Secondly, it is currently in the stage of PL-cum-ML licensing. So once we are awarded PL-cum-ML, we shall be initiating the execution of mining plan for approval from the Ministry of Coal. So that is the current stage of that project.
Yeah, but a follow-up. So how does it work in the whole scheme of things? Because that you will have to probably... yeah.
Sir, I request you to join the question queue again, please.
Sure, okay.
Before we take the next question, a reminder to all the participants to limit your question to two questions per participant. The next question comes from the line of Hitesh Randhawa from Kagar Quest Capital. Please go ahead.
Yeah, hi. So I had a question on the order book, and I just request you that, okay, if you just provide me this information. I'm not asking for any granular level details, but what is the current bid pipeline that we have right now, and the order book division between private and public sector. So what is the current division, and normally is there any kind of proportion or ratio that we try to maintain between private and public sector?
It is given in our presentation. By and large, you can take it almost 40% for public and 60% for private.
Okay. And what's the current bid pipeline? Sorry.
Hello?
Yeah, and what is the current bid for orders?
Order book value, as we said, 412 crores as of date, and the breakup I told you in percentage terms, which is ballpark number.
No, what I'm asking is that what is the current bid pipeline? How orders worth, how many crores have we bid for right now?
Yeah, so we've already answered that question. So we can't divulge that number because we are into competition. So that we've already answered. So it will be quite significant, and we shall update the stock exchange as and when we get the orders.
Okay.
But yeah, that's quite a lot number as compared to the current order book we have.
Okay, thank you. That's about it. Thank you.
Thank you. The next question comes from the line of Divyansh Thakur from Pinnacle. Please go ahead.
Thank you so much. I'd like to ask, sir, how much revenue visibility are we looking from the Jharkhand block, and can you please also tell me how much have we invested in it?
See, this is, we are looking for a visibility of about 300 to 400 crores annually once the block is in full operations. And as far as investments are concerned, till date, it is quite insignificant because it is a partially explored block, and we will start significant investment only when we get the initial clearance from the state government, the PL-cum-ML.
So, according to one of your presentations, are we expecting 100 crore EBITDA run rate from 27?
No, it has been now postponed to 28, but it won't be 100 crores in the first year of operations. It shall be less because first year and a half we will not be able to reach full scale production. That's only for the coal.
Oh, okay, sir.
But we have already amended our presentation accordingly. If you kindly see, it is not appearing 100 crores in 27.
Okay, sir.
Okay.
Thank you. The next question comes from the line of Saket Kapoor from Saket Kapoor Capital. Please go ahead.
Namaskar. I'm audible, sir? Hello?
Yes.
Yeah.
Yes, sir. Sir, in your business update, you mentioned about we have started the second phase of CBM production from Reliance Industries, the revised contract at 153 crores. So what portion of the revenue has been booked in the current quarter, sir? And what is expected to be booked in H2 out of this contract?
In the current quarter, we have booked about 24 to 25 crores, and I think the run rate would be same for the next couple of quarters.
Right, sir. And out of the total order book of 412 crore, how much is from the state PSUs and what percentage from the private players?
See, most of it, as we speak, most of it is coming from the private players right now. You can say it's about 60-40 right now.
60% is private and
so
40
you
is from
mean to say
government.
state PSU? State PSU, none.
Come again, sir?
No, nothing from state PSU in this quarter.
No, sir. Out of the that is you have mentioned that 85 crore is what we have bagged for this quarter. Out of that, the entire bucket is from the private sector, but the closing order book of yes, sir. Sir, the closing order book of 412 crore. What is the proportion from the central or the state PSU and the private one?
I would say 40-60, I told.
That is what you said.
No. Out of 412 crores we have, there is nothing from state PSU. Yes.
Okay. There is nothing from state PSU.
There is nothing from state PSU, but if you say public and private, I would say 40-60.
In the state PSU, yes, we have in OLIC and all that, little bit.
OLIC is very minuscule. It's about 1%. It's not even 1%. It's nothing is left. But when we say about CGWB is not state PSU. It's a central board. And the rest of it is from media. I hope that answers your question, or should I repeat again?
Sir, I just jumbled it up.
Yeah, you can better you refer our presentation. That gives you exact bifurcation. That will be better. Otherwise,
yes,
exact numbers in such a large gathering is very difficult.
Or you can IR. You can be in touch with IR for a basic,
I speak to the IR, sir, and get it done. And lastly, just if you permit me, 123 was our revenue for H2 last year. So on a bare minimum, we must be growing at 20% on what we have grown for last year H2. That should be our endeavor.
The growth numbers are significant for the next half of this financial year.
Okay. Okay, sir. Thank you, Dhanawad.
Thank you. The next question comes from the line of Kushal from Invade Research. Please go ahead.
Yeah, thanks for the opportunity again. Sir, if you can explain in detail how does the mining revenue recognition works, because that is a part which is not fully clear to me. When you are saying Jharkhand mining is roughly like a 200-300 crore thing from FY28, can you just explain me our revenue recognition versus the entire contract? How does it work?
See, as I explained, you're talking about Jharkhand or Oman?
Jharkhand, sir.
Okay, so there is a coal index price. So what we do is we multiply that coal index price by the maximum amount of production, allowed production, which we can take from that mine. So that is how we have come to a revenue of 300 to 400 crores annually at the peak rate. Does it answer the question?
No, sir, in terms of, how you are able to, you would sell it to open market, or can you just explain me the entire business model? How does it work? Who are your customers?
I'll tell you, it is very difficult to forecast the prices which we are going to have in 2028. So what we have done is we have taken, for our internal calculation, we have taken the coal index price. Now the coal index price keeps on changing from time to time. Okay. So based on the current coal index price, of W4 grade, we have multiplied that with the peak rate of production. That is how we have arrived at this figure of 300 to 400 crores.
And how to look at margins, sir, in this exploration activity? I mean, in this, what kind of margins can we clock?
EBITDA margins is about in the range of 42%, 43%. That is on coal index.
And that's there in the presentation. You can see the presentation.
Got it, sir. Thank you.
Thank you. The next question comes from the line of Ashish Soni from Family Office. Please go ahead.
Again, just two questions. When you said operating leverage, so your fixed asset can support till what revenues? Because you said there is operating leverage in 15-20% growth also. So can you explain that?
Can you repeat this question again, Ashish ji?
Okay. So when I asked the question on the margin, you said there is operating leverage. When you grow by 15-20% annually, your margins will grow faster. My question is how much of your fixed asset can support till maximum revenue? Okay. Right now.
Okay. Currently, we have more than 40 operating rigs. In addition to that, we have also subcontracted rigs for our AccuFer mapping division. So we work on a very basic model, which is fixed cost, whereby we target the fixed cost. Any company will have a fixed cost. So up till a certain extent, the revenue is only able to cover the fixed cost. So the idea is to work more to get more revenue so that we have a high operating leverage. So that is how we do it. Or maybe Agrawal sir can explain this. Can answer this question.
What you said is correct. In nutshell, what you said is correct. Yeah, in nutshell. Yeah, if you have any follow-up question, please tell me, Ashish.
Yeah, so the question is very simple, sir. Suppose right now your fixed asset can support 400 crore of revenue, take an example, and can it expand to 600 with the same asset? That's the question.
No. So basically what's going to happen, see, we already have 5 more rigs in the pipeline, which we have placed the order for 5 more rigs in the pipeline, which are going to be delivered in the coming months. Now, obviously, because the way we are expanding, the way we have, order book in hand, so we have to add more resources to, cater to the market. So, yes, and when we talk about operational leverage, operational efficiency, so what happens is that when we have more, resources in one place, so the overheads are reduced, and that is how we will get operational leverage.
Yeah, and just to add on to this, because of the fact of the matter is that fixed cost remains almost constant, so your profitability levels goes up disproportionately with the increased volume of sales.
Okay. Follow-up question on CapEx.
That is what is happening in H1 results. Yeah, go ahead.
CapEx wise, suppose you want to, because I think what I've heard is your order book might be substantially higher after 3, 4 or 6 months. So incrementally to acquire the 5 rings you spoke about, how much CapEx is required per ring? That's number one. And second, for your Jharkhand coal mining project, how much CapEx will be required from your end?
See, rigs are available anywhere from 1.5 crores to 40 crores as far as Southwest Pinnacle is concerned. So, I'm talking about the entire setup. So there are rigs which are doing small work. There are rigs which are doing works up to a level of CBM production drilling. So it all depends on the kind of rigs you are purchasing. As Piyush mentioned, we are in the process of buying 5 more rigs which are in the pipeline. The orders have been placed, and 2 of them are sitting in customs, and the other 3 are expected to be delivered in the month of December and January. So we will keep on adding rigs as and when the number of operation, the size of operation increases.
So my question was, CapEx for this, how much will be required for this year, next year, based on the growth projections or pipeline you see? And for Jharkhand mining also, how much CapEx will be required from your end?
See, as far as Jharkhand CapEx is concerned, we are expecting a total investment of more than 400 crores. which will be in two phases. So both phases will require first phase would require investment of 225 crores. That takes care of both the fund part and the non-fund part. And the second phase would attract an investment of 175 to 200 crores.
And so how will that be funded?
See, that will be funded through internal cash accruals, plus offtakes. We are talking to various local industry players. They are willing to support as and when we get the clearance from the governments. Plus banks are willing to support us. So that is how we have planned. And the second phase would largely come from the revenue of the first phase.
Ladies and
Hello.
gentlemen, the line for the sir has disconnected, so we'll move on to the next question. The next question comes from the line of Saket Kapoor from Saket Kapoor Company. Please go ahead.
Yes, sir. I was just looking at our cash conversion cycle. As we look at the first half, our receivables have gone up to the tune of 99 crore. So if otherwise you can just allude to it, what is the cash conversion cycle? And sir, then we are carrying inventories also to the tune of 48 crore. So what does this allude to?
So the first part of the question, otherwise I will answer. Dinesh, please answer the first part of the question.
Yes, I'll answer. Yes.
Yeah.
The receivable level of 99 crores is having three components. One is, billed revenue, second is unbilled revenue, and third one is retention money. So first of all, the quarter end, your H1 end results show higher revenue, which is not a realistic number because billing takes place more in the end of the quarter or end of the year as such. And majority of it is getting realized gradually and the numbers get down, number one. Number two, if you see the sales which has gone up by 2 times in this, obviously inventories, receivables are bound to go up. That is the basic reason. And moreover, the most important is in 18 years of our existence, there has been no bad debts. All monies are realized well in time. And our clients are always who's who of the nation, be it private sector, be it public sector.
Yes, sir. What is our cash conversion cycle then? Number of days by which we can...
Number of days, generally it varies from, you can say, average 45 to 90 days.
Okay. Yes, sir. Now
come to the second part of the regarding inventories. So each rig carries a certain set of inventories in the terms of rods, barrels, beds. So with the increase in number of rigs, the inventory will also increase. So these inventories have to be carried along with the rig, which is the main equipment to perform the operations.
Okay. If I may just keep in last question, sir, on the taxes paid past, otherwise we find in the cash flow that we have paid taxes to the tune of 1 crore 25 lakh. And for the remaining part of the year, as we are anticipating better business and therefore better bottom line. So in terms of the advance tax payment, are we have been on the lower side or the payment, or can you explain this?
No, not really. Not really. In fact, all our contracts we have to give the TDS. The clients have to deduct TDS at the rate of 2%. So that gives a leverage for us not to pay any advance tax, and just that is sufficient to take care of. But this year, yes, there could be some additional amount we have to deposit in the shape of advance taxes.
Okay, sir. Okay, sir. Dhanyavad, sir, and hope for the continuity of these interaction and all the best.
Yes, it will be. Yes. H1 से better होगा H2.
Yes, sir. ठीक है साहब, धन्यवाद सर.
धन्यवाद.
we take that as the last question. I would now like to hand over the conference over to management from the Southwest Pinnacle Exploration Limited for the closing comments.
Thank you once again for participating in this earnings con call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about our company, please reach out to our IR managers at Valorem Advisors. Thank you so much.
Thank you.
On behalf of Southwest Pinnacle Exploration Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming con calls.